Good morning from Chicago traders. It's 8:01 a.m. Central Time on Thursday, the 15th of October, 2015. Derivatives trading involves substantial risk of loss. It is not suitable for all investors. Past performance is not indicative of future results. Lots of news items overnight. I want to minimize the amount of time I spend on that, more time on the technical aspect of things. I'd like to do a market sweep today also, so this may go longer than usual. Quick rundown. API inventories came out much higher than expected, 9.3 million versus 2.5 million barrels. This is the largest build in crude oil inventories and petroleum inventories since April. Crude oil prices dropped, have recovered somewhat, but they are off by over 1% this morning. Chinese stocks rose to an 8-week high in Hong Kong after the government said it's reorganizing the telecom industry. It's basically injecting $36 billion worth of assets into that industry. Speculation is that policymakers will accelerate reforms of state-owned companies to stem slowing economic growth. That's caused a rally right off the get-go on the overnight session. At 4:08 a.m. Chicago time, that's 10:08 London. The ECB's Nowotny hints that more action is needed in Europe. This also saw a quick push up in the overnight session and a reaction in the forex market. Goldman Sachs reported at 6:30 this morning. Q3 adjusted $2.64, missing the $3.09 estimate. Surprise there. We see a reaction on that as well. $6.86 billion in revenue versus $7.29 billion estimated. At 7:30, we got September CPI came in at negative 0.2 in line, ex food and energy, plus 0.2 versus 0.1 expected. October Empire Manufacturing missed, down 11.4 versus negative 8. This is the third straight negative reading on that number. And initial jobless claims came in at 255,000 versus 270,000 expected. So much better. Continuing claims 2.16 million versus 2.2 million. Looking ahead at today, at today's calendar, as far as what we have left, we have Philly Fed today at 9 o'clock Central, just a half hour after the open, expecting negative 2. We have EIA natural crude oil inventories. Well, EIA natural gas coming in at the usual time at 9:30 Central, 93 billion cubic feet, and then we're looking for the 10 o'clock crude oil inventory number. Remember, it was supposed to be yesterday, but it's shifted one day because of the holiday Monday. U.S. crude oil inventory is expected at plus 2.577 million. Distillate inventory is negative 700,000. Gasoline inventory is expected at negative 1.25 million. Again, lots of speakers overnight. ECB's Constancio spoke last night. Nowotny is indicated. ECB Speaker Hansen spoke at 4:30 a.m. this morning. And then looking ahead, we have the European Council meeting in Brussels starting at 9 o'clock. Fed Speaker Bullard at 9:30, the same time as our natural gas release. Maybe he'll add to that. Fed Speaker Bullard making opening remarks at the policy conference at 9:30. And then also at 9:30 we have Fed's Dudley speaking at the Brookings Institute. And then at noon Central we have ECB Speaker Nowotny again. And then at 3:30 Central, 4:30 Eastern, we have Fed Speaker Mester, non-voting hawk, delivers remarks in New York. So a lot of chatter today, but the key figure is the Philly Fed number at 9 o'clock Central, 10 Eastern. Let's switch over and look at the markets, context, and all that good stuff. Wrong chart. Wrong chart. Okay. All right, just 1 second. Let's bring this in. There we go. Okay, so yesterday, So yesterday the expectation was, given the context we were under, the expectation was we would lose this low. We would have responsive buying up into this 97 area or so. In either case, we're looking for responsive buying into the prior day's range. But the overall picture is that we would likely drop down to the 8250, this line. This is the point of control from a couple weeks or a week ago. I'll go over that, why that's an important level. And what the market did is it played out the levels pretty well. Overall, we did have the thing that threw things off a little bit is this run up midday to 98.50. That was unexpected. The expectation was that there was a ton of resistance here. The prior day's low. We had the mid of the session VWAP all in that area. The prior day's close. The expectation is it would push here, chop down, and then move lower down to the set target at the point of control of 82. Remember, 89.50 was the over under. When the market holds below 89.50, we do expect that 82.50, and we got it. On the nose, note that the 82.50 was hit to the tick here. Before the rotation up, a nice 5-point rotation on the pullback. This was not done, however. We had a weak low that was put in here. We missed it the first time, and that's when I tweeted about it. It went to 82.75. We missed it, and then we pushed back up before we actually got to 82.50. This is basically a one-tick test of the last low, and all of a sudden we have a squeeze. But overall, we had a weak low, so we expected a lower low going into the end of the session, and what we got was this chop down to a second low. So what we had yesterday is a double bottom. We left a double bottom at the bottom of the day, giving us a very sharp taper on the profile. So the expectation is for a lower low overnight. We did not get that. The news out of the Chinese market was fairly steadily good news. Also from the comments on Nowotny and various other factors, the market ended up running up all through the night, and we still have this weakness below us. So this becomes a key area. I'll add a reference line down here at 82.50. Even though the point of control has been touched, this low is still weak. So overall, the performance yesterday, the hypothesis was excellent, and we did attain that final target. This area here was a tough trade here. It looked like it was done on the downside, and even the Nasdaq actually ended up pushing to the IB high. The Nasdaq ended up going up on a relative basis, going to the IB high and one ticking it for a very, very difficult to trade one tick failed auction of the IB high before the Nasdaq actually flowed down. So let's look at that for a second. So here's the NQ 15-minute. You can see it it came all the way down, breached through the prior day's low, tested the mid, the prior day's low, and so on, chopped around for a little bit, and then it pushed up and it took out the high, the IB high, which was 65, took it out by a tick at 65 and a quarter, and then it worked itself down to the IB low again. Very tough trade in there, neutral day. However, in the ES, It was much more orderly. We did not have a neutral day, just a normal variation day, what's called a normal variation day. So that's that. Again, we need to mark out the 8250 as a week low. Overall, where does the 8250 come from and why is it important? The 8250 is the last major um, area before we broke higher. So you could see here, before I extended this profile out, this composite that you see here on the far side, this composite, it actually surrounded these days here. This composite was consisting of these days until yesterday. Yesterday we've moved back into this noise down here, and the 8250 was a very sharp, very clear balance zone. This is the 8950 right here that I talked about earlier. Once or 2 days ago, I said once we breach 8950 and hold below it, then expect it to ride down to 8250, and that was a picture perfect auction there. Once we break the LVN, we're likely to test the next magnet, which is the high volume node or the most recent balance. And the most recent balance in this area was 8250. And so we bounced off of 8250. However, this market is likely to be trapped here. Was likely to be trapped here. But overnight we broke through and we pushed up to the 2000. The overnight high is 2000 right there. And the overnight point of control is at 1998. So we have what I'll show you in a minute, what is a P-shaped profile, essentially squeezing shorts out. Tough environment over the last 7 years for shorts. They've had their glory last October and prior year October and so on. But it's just short-lived. The short side is not something you would want to stick around in for now because everything supports markets going higher, right? So now we have this composite, this big microcomposite. Why do we draw microcomposites? Just as a refresher, a microcomposite basically is drawn when the days fall back on themselves. So as we rally here, there's no microcomposite. The next day we chop around, no microcomposite. But the following day, once the following day it trades inside of the prior day, now we draw a microcomposite around these 2 days to see what happened in that area from a volume perspective. This day here tested the other side of the microcomposite and fell off, so now we extend that microcomposite to the 3 days. And this way we track where the auction has occurred on those 3 days. Yesterday, the auction was a continuation. It was actually yesterday was really a textbook rotation, a study in rotations and the auction itself. So we had on Tuesday, we had what looks like an impulsive move down. We had a pullback yesterday, and then we have the completion, and then it looked like it was going to do the correction. After that, it did not work. That's what I thought when we broke through the mid. I thought that we would pull back to the mid and push higher. We ended up pushing lower and actually attaining the original target. So a couple of losses there. That's just part of the business. So you just you take the best guess, the highest probability guess you can come up with, and trade from that direction. But overall, yesterday was a continuation of the prior day, and it ended up making multiple continuations yesterday. So the expectation was for a lower low. I expected this morning to come in and find it in the 78 area, to be honest with you. But that didn't happen. It just turned around and pushed higher on, again, the China news. This is why reading the news in the morning is really important. It is what colors some of the context. So with this profile, with this composite, we have some very murky areas down below because the market's been in a sort of an uptrend coming in, and so we didn't experience very good balance here. You can see these days had multiple distributions. This was a nice balanced day, but these other days just multiple distributions as the market sought higher prices. So the composite here is very difficult to read. So what I'm going to do is not extend the composite all the way through. and just basically move this composite back to this area and just use it as is. So now I can see what has happened below. So as we push lower and stay into the area of this composite down here, we can see that the most valuable price down here is the 1972.50, which was our extended target from let's see, the Monday I talked about, or Tuesday I talked about 82.50 being tested, likely bounce off of 82.50. So we're looking for a bounce off of 82.50 because of the point of control, and then eventually we look for it to come back, drop through, test from below, and then if buyers cannot be found at these low prices, then we're looking for 72.50, and this is over several days. This is what's likely to happen. This is what I'm looking for. Wow, it's 8:17 already. So let me wrap this up. For today, we're in looking at the overnight session. You could see a P-shaped profile like I talked about, a short squeeze. We are stuck inside of yesterday's range. We're opening inside of range, outside of value. Very tricky situation here. This is the type of day where you just need to sit back and watch to see what the first half hour is going to do, because you can't handicap this type of action very clearly. The point of control is above. We have a weak high at the overnight high. But my guess here is that it's likely to chop, and it's likely to take back this rally from the overnight. Inventory overnight is positive. Prices are positive against yesterday's close. So the overnight inventory is long. So we're expecting it to drop on the open to rebalance inventory. There's a good chance that today will trade inside of yesterday's range. But we do have a lot of speakers. We have Philly Fed. We've got a couple of factors coming into play today, so it's hard to handicap. So my primary hypothesis for today is to retrace down into the 1984.50, and if it's not able to hold, then we are likely to take out this week low and start our way down. I don't expect it to move very far down below 82.50. Why not? The reason is because we are in a very thick balance zone right here. A lot of trading happened here. Once it gets down here, it's likely to get tangled, and that's why we expect chop in these point of control areas. These areas act like tractor beams or magnets because they represent a high consensus or a high agreement on value. Otherwise, there's no volume there. The only reason we get volume is because participants agree that that price is a fair price. Okay, that's how the auction works. So that's that. That's your primary hypothesis. Just a quick rundown. The 10 years have been very interesting. You can see that the 10 years have pushed to highest highs since the 9th of October 2013, 2 years ago, and have pulled back, and now they're challenging those highs again. This is the equivalent of the ES being down in the 1820, 1830, 1840 area. Okay, so you can see that the Treasuries, the middle of the yield curve, is anticipating that even if the Fed starts turning up interest rates and starts lift off, that it's not going to be by very much because these participants are buying up Treasuries. So very interesting look at the overall condition of the market from a macro perspective. This market has moved away from the composite point of control and has tested the value area high of this composite and is working its way up. I actually expected it to hit this 129.21 in the Treasuries yesterday. It stopped just short at 129.18 and a half, and it has come back as the market rallies overnight. The money comes out of Treasuries and goes into riskier assets like equities. The euro is another one I wanted to cover real quick. The euro's been stuck in a very wide range for a long time since that correction back in August, and it's been stuck in this $1.17 to $1.11 range, and has rallied a little bit yesterday, but this morning it got hit on the numbers that came out and the comments by Nowotny. So immediately the euro has taken a downturn and is probably working its way back to, it's shown in black here, unfortunately, it's the euro is likely to retest the 113.38 and the 112.59 or 112.60. I expect the euro to be down here over the next few days. Okay. I'll cut it off there. I had a few other things I wanted to cover, but I'll cut it off there. I'll leave you with that. Again, I'll catch you tomorrow. Good luck today. Watch your risk. Take care.